If you have over $200,000 sitting stagnant in your bank, retirement account, or home equity, then you're literally losing money. On this show, you learn how to get that money working for you consistently and conservatively. Learn to grow your nest egg with your host, Shawn Winslow. Let's dive in.
Welcome back to another Finance Friday episode. I'm your host, Shawn Winslow, and this is a Multifamily Money Podcast. What's going on, everybody? You know the drill. Every Friday, we're coming at you all things personal finance because it's not what you make, but what you keep. So we want to get your money working harder and smarter for you. And today, as I mentioned in last Friday's episode, I want to talk about what's going on with the US dollar, something called the petrodollar, and other countries not wanting to transact in the US dollar when it comes to trading oil. So what is going on with that, and why does it even concern us as individuals, right? As citizens of the United States, why does that concern us? Why does that concern our money? Why does that concern our financial position? That's what I want to get into today. So, might not be the most exciting topic, but I think it's very important and everyone should listen. And I've done a little research, and obviously this could go many different ways. And I'm not here to take that crystal ball approach and tell you how I think it's going to go, because there's a lot of moving parts here. And so it wouldn't benefit any of us for me to take an approach like that. But I just want to lay out the facts, what the petrodollar is, how it was created, why it was created, where we stand now, and potentially, what it could mean for us if it does go a certain way or another. So let's just start from the back. So back in the 1970s, you all might remember that there was something called the gold standard before, where the US dollar was backed by gold. And that's where the term gold standard comes from, right? And Nixon removed us from the gold standard. Now, there's a lot of discussion on why that happened, but I think it has a lot to do with the petrodollar. And what the petrodollar refers to is an arrangement that was made in the 1970s where oil exporting countries agreed to sell oil exclusively in US dollars. So this agreement effectively created demand for US dollars in global oil markets, providing a stable source of demand for the US currency and making it the dominant reserve currency for global transactions. And if you got to think back in the 1970s, this was probably the largest industry, oil, right? Everything ran on oil. There was no other source, right? It was fossil fuels. There's no other source really. There was some nuclear, right? But solar and wind hadn't really was not really there at all, right? And so this created a stable currency, or at least relatively stable to other currencies, right? Because it was the global reserve. It was a currency used for all countries to transact in oil transactions, right? And all countries were using oil. And so now what is happening today, right? So that was the reserve currency, every country. So that included the likes of Russia and China. They were, up until this past week, they've been transacting in US dollars when it comes to oil. So I bet you've also been hearing about these BRICS countries. And so what is that? Well, that's Brazil, Russia, India, China, and South Africa. And so these are large emerging economies. And recently they've expressed desire to reduce their dependence on the US dollar, in international trade, especially with oil. And so some of these countries have even sought, their own currencies, bypassing the needs for the US dollar, and have created alternative financial institutions that compete with existing US dominated institutions. So think like the IMF and the World Bank. These institutions trade primarily or exclusively in the US dollar. And so we've seen the likes of China and Russia. They, recently they're trading in the yuan to transact in oil. And now, so what happens if they are successful? What happens if they are successful and, completely reducing their dependence on the US dollar and transacting either in the yuan, or there's been talks of creating their own currency and obviously their own financial institution to make these trades. And there's also been talks of countries doing this so they can make some type of digital currency, which is more, trackable, right? And controllable. And so if they were able to, completely reduce their dependence on the US dollar, it would potentially weaken the dollar's position, as the world's primary reserve currency. Because if you have major emerging markets, likes of China and Russia, not using it, that obviously hurts and weakens the dollar. And this could then lead to a decrease in global demand for the US dollar, which could cause the value to decline relative to other currencies. It would also increase borrowing costs for the US government. And you ask, well, why would that be? Well, think about it. Right now, the US dollar, world's reserve currency, is one of the most stable currencies, relative to all their currencies. So for the government to borrow, which we've talked about in the past, they create treasury bonds, treasury bills, and then there is a yield that is given for you to give your money to the US government that then borrows your money, right? So they're borrowing your money and they're paying you a yield. Well, if it becomes more volatile and the dollar weakens, then the US would be required to pay more of a yield to those that are allowing the US to borrow their dollar because, right, the risk has gone up. So it's a whole risk reward. You need to be rewarded more for the more risk you're taking by lending to the US government. So that would, lead to higher interest rates to compensate for the risk that is associated with that. And so think like in the worst case scenario, and this, I'm not saying this is where it's going to go, but in the worst case scenario, this could be something like Venezuela, 1,000,000% inflation. And that's not an exaggeration. It literally was 1,000,000% inflation. Imagine going to the grocery store with a wheelbarrow full of cash to buy a carton of eggs. You think eggs are expensive now, wait till this type of hyperinflation takes over. And that's because if the value of the currency plummets, that still costs the same relative value to produce a good. So it's going to cost more of your dollars to buy that good. And that's what happens. And then an economy crumbles because it cannot sustain itself. The money that you had is now almost worthless. And that's what some people on one side are really fearful of. Others are fearful that this is a play to create, again, some type of digital currency that is more, trackable or traceable, controllable. But at the end of the day, I think what can really, really solve this issue is us, U.S. citizens, focusing on our own personal excellence. We're better. I also think a shift to small businesses. That's what built this country. When you have a bunch of small businesses that are creating their own products, their own services, employing people here in the country, more dollars stay in the country. We become more self-sufficient. We're not, we don't rely on other countries' resources, other countries' labor, manpower, whatever you want to call it. We don't rely on those things. We produce here. We employ here. And when we have a bunch of small businesses, it reduces powers of the lobbyists, right? Because now you got to think about it. There's been so much consolidating in businesses that the power relies in fewer and fewer hands, and then they can be swayed by lobbyists and vice versa. These companies can then sway the government to do certain things, whether they're good or bad for us, the citizens. But when you have a bunch of small businesses that are creating great value for a country, and there's more of them, it's harder and harder to control or force them to go a certain way, right? They all work together, and that's what created this country. They all work together to make the lives of their families better, which thereby makes the lives of everyone better. And I think that's what we need to go back to. Like it's created this sexy thing of building something and then selling it to the big guy for a top dollar and then riding off into the sunset. That's been made sexy. But is that what's good for the country? I don't think so. It gives more and more power to fewer and fewer. People talk about the 1%. They don't talk about like what actually happened. They talk about 1% and the money they make. But what about the 1% and the power that they have over major decisions that affect the world, affect our country, affect our people? So this is a serious topic, right? the petrodollar has been in effect since the 70s. It has not only, allowed our currency to stay stable relative to others, but it's also provided us the power of, being the United States of America. It's provided us with influence over the world. And yeah, I get it. That could go away if this continues to happen. But I think here in the United States, we all need to focus on ourselves, making ourselves better, our lives better. Get out there and build that business you want to build. So then we can keep money here in the country, and not only just the money, but the labor. That's what will continue this country to go forward. And it doesn't matter what happens out there when we become less reliant on other countries and more independent and self-sufficient. It doesn't matter. All right, guys, I'll get off my soapbox here, but I just wanted to share that with you. It's something I definitely keep an eye on. The kind of the linchpin in this whole thing is to see what Saudi Arabia does. They've used language that it has expressed that they would, consider trading in other currencies other than the US dollar. And that could really hurt. They've been quote unquote ally, if you want to call it that. But, they've been on our side in one way or another. And I've always transacted in US dollar, and they're the largest exporter of oil. And, what they do affects the world. They recently said they're going to cut production of oil along with Russia. And that's again going to increase the price at the pump. So they can do these things and have big effects on the global stage. And if they decide not to exclusively trade in the US dollar, that could weaken the US dollar as well. So this is something you all want to keep your eye on. And the question is about, Shawn, well, what do we do? Well, in times like this, you invest in income producing assets, tangible, real assets. Obviously, you still want to have an emergency fund, but you want to invest your money. You don't want a bunch of money sitting in cash. And we all know that. Another reason for that is what's happened with the banks, but this is another reason. If something like this could happen, your dollar could erode like overnight. What happened in Venezuela? Now, I'm not saying it's going to be that extreme, but things like that could happen. You have to plan for the worst so you're prepared. And the way to do that is to invest cash flowing assets, assets that are real, that'll produce an income that will generally appreciate in value over time. That's what I plan on doing. And that's what I'm currently doing. Obviously, in times like this, it's harder to find ones that make sense. But again, easy doesn't pay well, right, guys? You got to put in the work today so you can live the life you want in the future. So you'll be willing to put in the extra work, look at more opportunities, analyze more opportunities until you find the one that makes sense. All right, everybody. As always, easy doesn't pay well, and instant gratification is self-destructive. So not only get out there and work hard for your money, but have your money work hard for you so we can all create the lives of our dreams. And as I've said, we can all create that personal excellence, which will then make this world a better place. All right, everybody. Catch you on the next one.
Hey, this is Shawn Winslow. After being in the financial service industry for years and having candid conversations with good people just like you, I realized that so many of us are wanting an investment strategy that provides solid returns and consistent income without the bumps in the road. There's little known secret that your financial advisor doesn't want you to know. There is investment out there that is less volatile and the returns are stronger. Get more details by going to greenbriercg.com and clicking on the free e-report. And by the way, if this show has provided you any value, then feel free to leave an honest written review and of course, share it with a friend who needs it. See you next week for another great show.